Hello and welcome to FountainFX on Friday the 26th of September 2014. We are looking at the pound against the Australian dollar. The pound is showing strength against the Aussie dollar. Aussie dollar is showing weakness against other currencies. So that's the reason why we're looking at trades for this particular pair, because it's pushing up, it's creating new highs and new highs and new highs and higher lows, etc. So it's in an uptrend. So what does that mean? How can you actually benefit from that? Well, the key thing in terms of trading an uptrend is to buy the pullbacks, and by that I mean when price will go up in like zigzags. So it pushes up, creates a new high, and then it will pull back down to a previous high and use that as support, and then turn and go higher. And it's those areas where of support that you want to be buying at. So in an uptrend you want to be buying at support and selling at resistance. And a downtrend you want to be selling at resistance and buying back at support. So hopefully that makes sense. And what I'm looking here is that I'm just going to use this session to highlight to you areas of support and resistance. If we go to the left, okay, this was Tuesday's blog, which I shared yesterday, concluded on what happened, and we can see that price was pulling back. Price is in an uptrend. Price was pulling back on over Tuesday morning with the Asian session, and then at this point it bounced. It created and formed this area of support. If we go further back, it wasn't really a valid area of support. We hadn't necessarily seen any real price action, maybe a slight bit here, but it actually formed it here. This is called order flow. This is where price starts to go sideways to try and find a floor or a ceiling to its performance before it then continues in either direction. And in this instance it came down to this lower level, which is the 183.60, and it found an area of support and pushed back. Now for this to be a continuation of this downtrend, then we then get these bearish candlesticks. We'd expect them to continue down, but they don't. They stop again, go sideways and push up, and we get a higher high from this. So it's starting to show that this is a valid area of support and price wants to push up from here. So when it comes back down to it the third time, great order entry there, and price pushes up. It has a slight delay when it comes up into here and then pushes higher from there. And this is actually a 150 point trade, where if you'd have taken 100 to 120 points from it, you'd have been extremely happy. Even taking 50 points, it would have been very, very profitable. So this is the kind of things you need to be looking for. If we then go sideways, the following day, Friday, I wasn't trading, so hence there's no real marks, but if we look at the top, we can see that we start to get lower highs, and if we just run a trend line across there, we can see how this has been honoured, and then on Friday morning, 9 o'clock, it's honoured here, sells off, honoured here, sells off. We even get a wick that comes up to it and sells off. So that's quite a strong trend line for resistance, and the market was certainly using that to sell from. If you'd have been up in the morning looking at the market, then you could have seen here this is very much a strong reversal, because you get a very strong candlestick with momentum upwards, and literally it's like it hits a brick wall, goes sideways and then falls back again. So that would have been a great area to have sold at, especially with confirmation, as price couldn't get any higher at this point. So a sell at the 184.90 would have reaped you a nice trade all the way down to the 184, so around about 90 points. You may have even waited and got in a little bit later, 184.70, and sold, so that's 70 points. So by using the 15-minute, you can actually see some significant levels, rather than getting involved in all the sort of whipping backwards and forwards that might happen with a 5-minute or a smaller chart, which I don't recommend at all. 15-minute or higher for your day trading. Anyway, so that happens. If we also look at where price was previously and we go to the right hand side, we can see that price dipped into it, used it as a great area to buy, and then just rallied out of it again, because from this area we created a higher high. This was a new high here, and prices rallied out from it. And if we see prices rallied out, we then saw yesterday morning reached an area of sideways consolidation, range bound price was. But if we take out this trend line and we just put in another trend line here, we can see that price pulled back and then continued on up until it reached this area of resistance. We'll just highlight this as well. This was an area of resistance here. Price pulled up into it, went sideways, came back down into this area of support and rallied up again, and rallied up with momentum. So when it finally got back down into it, that was confirmation to say it's a valid area. Price pushed higher, then it pushed back up from it. So it's like it was creating like almost like a brick wall. So to buy at this point was a very valid reason, and also it went as well in favor and created a new high. If you look, this was the previous new high. We've now got a new high here, and then after that, prices then really used this as an area of resistance and has struggled to get through it until this morning, where price is now broken through. So I've got a dotted line, I've got a buy order here because I'm expecting price to pull back down, or I'm not expecting price to pull back down, but should price pull back down, I've got a nice order in here with the expectation that it will turn what was resistance into support and continue in the uptrend. And that's it from FountainFX. Happy trading. We will catch you on Monday. Goodbye.